Hello, trading has closed on June the 5th, 2018. My last call said unless we took out this high early, lower prices should print. We took the high out early. I said if that happened, the rally could continue. Well, we actually closed up a small amount, so the call certainly wasn't wrong, and technically it was right, but basically it was an unchanged day. We have a similar situation here. After rallying all day, we couldn't close over these really highs, couldn't even close over this high. This is also a pattern which tends to close at the high of the day. And if that doesn't happen, and if we don't take out these highs early tomorrow, it's a negative pattern and lower prices should print. Tomorrow's pattern is the one with the early low. It doesn't preclude us from gapping up first. Now, I think there's a good chance we are going to take these highs out, but it's not a guarantee. Here was the pattern early on. MEJT said ultimately lower and higher prices would print. We got the lower prices. System said immediately they wouldn't stick and prices would return to that line, which they did. We had this whipsaw in the afternoon. MEJT said don't believe it, we're coming back to this line, which we did. Resistance here, support here. Now there aren't any targets which have to print. We've got the minimum from the ultimate buy signal, but almost always we get more than the minimum, even though it doesn't have to be tomorrow. Often it is. So optionally we have a target of going over today's high. So I think there's a reasonable chance it happens, but it certainly isn't a lock. And if it doesn't happen, if we don't take this high out, lower prices should come, and we should know pretty early in the day. Now we're getting close to completing the pattern, and my ideal target's around 27.59, give or take a little. We came within a few points of that today. I'd still like to see it print, but it doesn't have to. What if we don't take this high out? What if we start dropping? That's not my preferred scenario, but if it happens, this is the equity options. Put the call ratio. You'll see extreme sentiment. Everybody wants to have calls. Usually when everybody wants something, they regret it. You take this trend line, this is the perfect match, but if you connect this low and this low and this low, just connect them all, you'll see how we're banging right up on that trend line here. You'll see how it separates this consolidation pretty much from this consolidation. So we're banging up on trend line resistance. Now if we stop there, and if this is the count, the one I've been using, if that's right, you really don't have the Fibonacci relationships you want at this high. But this isn't the only count. This count doesn't break any rules. You have A, then an A, B, C for B, and if you take your Fibonacci grid, you'll see how we got right at the 61.8. You can also see how this black ABC has a perfect Fibonacci ratio and how this ABC has a perfect Fibonacci ratio. Now, if that marks the high, you'd want to see an impulsive move down start almost immediately if we're going to get blue 3. I don't see it. The only way to make it work would be if you had 1, 2, 3, 4, and you're going to have a fifth wave which truncated, and frankly, I'm not convinced that's what's going on. This just doesn't look like a 5-wave structure to me, although I admit I could be wrong with that. So, for tomorrow, we need to take this high out early, otherwise lower prices print. I think the odds are, I think it's more likely than not that we do take that high out, but we're awfully close to one of my targets at 27.59 plus or minus a little. And if we do gap up and take this out, there's a chance of a good reversal from that level. And if we don't take this out early, lower prices should print. And if we start dropping in spades, retrospectively, you could say we have all we need for a high. Even though I don't think it's my preferred scenario, if that were to happen, I could explain it after the fact. So we'll have to see if this falls early or not, and that's today's call.